Welcome to Trading Lounge and the European indices for Thursday, the 24th of June. So with the DAX here on the daily chart here, we're looking at this as wave 1 here and 2 here, and then all the way up for 3 here. And in wave 3 here, we're looking for 5 waves, 5 smaller waves. And we had counted from wave 2 to wave 3 here as 1 and 2 and 3 and 4 and coming in for wave 5 as the top here. Now that still may be the case here, but in the US we have extended this out here. So what we can do here is that it still may get a bit more complicated and we can have a little move here and then this wave 4 here and then push up for that move there. There's also the case that we can move this wave 5 further up here, right? And then look at this as wave 1 here and 2 here, and then going into wave 3, 4 and 5, moving higher up here. It's kind of what we've done with the US markets in a way. So with the US markets, we also had this in as a top here. It's on the S&P 4-hour chart here. So we had this in as a top, but we realized that we're getting an impulse wave in this particular move here. So that means we've had to extend it up. So we've looked at this as wave 1 and 2 here and moving up for wave 3 and 4. So you probably know that already. So it's what we're also looking at doing with this market. So on that basis, we can look at this here from this wave 4 here, looking at this as wave 1 here and wave 2 here. So yesterday we were looking for wave 1 to the top side here, and then we're expecting a wave 2 to pull back. So we have pulled back here. But what we need to be careful about here, because a lot of the DAX and the FTSE has been giving us this kind of price action, which hasn't been that easy to trade or to follow in a sense. So it's possible that this market can just push up to here somewhere and then pull all the way down. So we need to be a little bit careful about that. Now this move up through here, we can still treat it as wave 1 and 2. But if this area here where wave 2 is supposed to be, if that becomes the resistance and drops down from that point, then obviously we can't be using this particular count. So in this count, we do need to see it move up. So on the 1-hour chart here, just to sort of look at the detail a little bit more and sort of just shoot the breeze on the situation. I can still look at this as wave 1 to here. But the main point here is that this price point here, the 15,425 or whatever it is, the lower end of the 61.8% retracement level, if that becomes the resistance here, then it'll have to be like this. So we need the first low below the level and then a move down from that point. Now it may be that it'll be something like this. So if that's the level there, that first low below the level, it comes back up above here. So this one's a bit messy. It might be nice and clean. It might be like this here, but that first low below the level, that's what we're looking for. So if we get that first low below here, so at that point, if that's breached by another move down, then we're going to be bearish at that point. Now, even though this is not the best 5-wave looking structure that there is, I'm reasonably confident that we're bullish based on what we can see with the Nasdaq making new highs and the S&P pushing up higher. So we would expect the European markets to sort of tag along for that journey. Okay, so based on that, if we take the top here and the low here, let's just assume that low is in place. There may be another little move in through here before that occurs. But if that just either way pushes up here, that high and that low here currently, this is the 61.8%. So the 15,600 here, if that becomes the support, there will be the arrival, the reaction, the first high above the level, and some type of little correction here. But if you can see it gaining support, well, then you can move in on the long side here again. And certainly taking out the top here. So we want the market to prove to us that it's strong. So it must get up there on this. So, yeah, just recapping, you know, the NASDAQ and the S&P are looking quite strong, and that's based off stocks, obviously, looking at Tesla and Apple, and those guys are all lifting up sort of nicely. So they're carrying the US indices higher, and the DAX can, you know, tag along with that, the stock 50 as well. So looking at the euro here, stock 50 here, I've got a slightly different count on this one here. And we could count the DAX like this as well. But the problem with this count, looking at wave 4 here and wave 1 and 2 here, and then we've got 5 waves up here, 1 and 2 and 1 and 2 and 3 and 4 and 5 waves up for 5 and 4, and then 1 and 2 and 3 and 4 and 5 here, and 5 in the third wave here. This move down through here appears to be in 5 waves. So this is why I'm a little bit sort of concerned about it. So 1 and 2 and 3 and 4 and 5. So it's possible that this wave 4 here can get a little bit sort of, well, messier, you know, in a way. So we could view this, sorry to sort of not nail it down for you, but it does appear that we got 5 waves here. So in this case, we could look at an A and a B and a C here. So we could actually come down here further in one way or another before heading higher here. In this case, we can, because of that high and that low here, we're above the 50% line here. So we can, now that that's retraced back lower here, we can go long from that point. So any move up through there we can treat as a long trade, because as I just mentioned, we've got somewhere in that vicinity above the, well, we're above the, you know, we're at the 61.8%, the 50% is here. So, but anyway, you get my drift. So any move above that, we can go long on. It's just that we got that 5 wave structure here. So this may get a little bit more complicated here, this correction. You know, we may get, you know, it could even move up to here somewhere and then have a move down as well. So we've really got to be careful, because these European markets have been, you know, there's been a lot of swings in them lately. So we just really, you know, I think trading less is better at this stage. Let's have a look at the FTSE. So the FTSE is kind of interesting as well. I mean, it's been a bit of a dog's breath, all this wave structure. You can see how choppy it is, but we still have the 7,000 as the support here. So while we're above the 7,000, we should be looking for long trades. And also, because the US markets are pushing higher as well, we need to look at that. So there'll be a case here for 5 waves down. There'll also be a case for 3 waves down as an A and a B wave here, and then 1 and 2 and 3 and 4 and 5. So it's not very helpful. Let's just double check this for a second. That's the 61.8%. I'll just retune that back in a little bit here. So that's going to be important for us. And I'll just clean this up here. So that means that we now, from that high to that low, we're at the 61.8%. We can see that the market is stalling there, and also the 100 as well. 1 is the strongest number in the market. The 7,000 doesn't mean much, it's the 100. So we can also look to go long above this high here with this. On the downside here, we'll have a look at this structure in a moment. It does appear to be 5 waves. So in this case here, the market could pull back to the 61.8%. So I couldn't turn bearish in this market unless I had the 7,000 as the resistance. Okay. So we can go long above here. It does appear that there's 5 waves in this, because if there's 5 waves here, then after a correction, after some sort of ABC correction here, we can, you know, look to go long again. So let's just go to the hourly chart and look at this here for a moment. So it looks like wave 1 and 2 here, and the third wave in here that may take us to here. So I'll just draw this in here if that's okay. I might need to be 1 degree smaller here for that. 1, 2, 3, 4, and then we'd have to look at this as 5. It's also a bit of a dog's breath, but yeah, so it does appear that there is 5 waves here. I mean, it's not the nicest set of legs I've ever seen, but it's it gets us there. Now, just looking at this retracement level here again, that would put us, that's the 50 and that's the 61.8%. So it can move down to that point. So don't be shocked if it does. And if it does, then we would, I don't know if that's impulsive or corrective at the moment. It looks pretty impulsive to me. So I'll put a B wave on top there. Because Thursday too is also what we call the bear day as well. So we'll see how that goes. And so we'll really be looking for the trade on Friday, really, for this Friday morning, late Thursday afternoon, Friday, depending on what the US markets are doing. So this this move down here can retrace back up 50 or 60%, which is at supply level, of course, and then come down and check this again, and then head off. Now, if we get that B wave in here, then you can also come down and take that top of the B wave out there and go along from the B wave top. Okay, so I'll just sit that on top there so you can, so remember what we've said here, but it's always pretty much the same story with me in that regard. So yeah, look, that would be the long trade setup for the FTSE. I think I just really need to keep it as simple as that, really. So I'll leave it at that, and thank you for tuning in. Alrighty, cheers.